Hey everyone, welcome back to the Your Money Your Life podcast, episode 316 of the pod. Do me a favor, wherever you're listening, you like, subscribe, five-star rate, and review this podcast. We do this every week, and we will continue to do this every week. So let's jump into it. There's going to be a little bit of news, a little bit of discussion on the markets, and so on and so forth. And we're going to get into everything that we need to. Let's first start with the market and what's been going on. The biggest thing is the themes that we talked about, the earnings, other themes that we talked about, inflation, CPI, the CapEx spend, companies spending on building out artificial intelligence structures, logistics, where everything that's needed. That CapEx spend is playing a part in tech earnings, so we'll talk about that a little bit as well. Year to date, we're about flat. Again, the volatility has started this year. We're gonna get through this in the sense of like the market potentially is right now pulls higher in the later half of the year, with still more volatility through spring, early summer. But that is to be seen. But we're still positive to about flat to start the year on the S&P 500, positive to flat. We're trading already positive to flat to start the year. 6 months, of course, we're up. A year, of course, we're up. 5 years, of course, we're up pretty heavily. And so you're waiting for those, not waiting, you're looking at those opportunities. And if you're dollar cost averaging, saving every month, you're getting the benefit of buying at times that are high, at times that are low, and just dollar cost averaging. That's the one of the main features of saving every month and doing those things. So that's one thing to look at, folks. And let's jump into current news. OpenAI, we like to focus on it because, again, not just OpenAI, all artificial intelligence companies. There's a lot going on in that space, a lot of spending, a lot of money being made, a lot of valuation increases. And OpenAI is one of the companies that is driving that. They're closing in on a massive 100 billion plus funding round, and that it's going to continue to pour cash. Investors are continuing to pour cash into the chat GPT maker, which is, of course, OpenAI. Anonymous sources said the influx could push the startup's valuation past 150 billion. So this would be, before, you know, this could be a company that before it goes public is $1 trillion valuation company. I don't know. Have we seen that besides Saudi Aramco? Have we seen that? Were they? Because this is kind of like crazy valuations here in the private markets. Um, Amazon, Nvidia, SoftBank, and LinkedIn parent Microsoft are already invested in OpenAI. Those companies alone in this round could invest 100 billion if they commit at the top of their expected ranges. OpenAI is, of course, not yet profitable. This is a private company that's burning cash to grow, burning cash to build their infrastructure. But it has trillions of dollars, not billions, trillions pledged to infrastructure projects. That is a lot of money. We're talking about trillions of dollars, folks, with a T. That's kind of incredible. So we have to keep our eyes on what's going on because if you're someone that's looking for jobs, looking for different things, all these things play a part because, we obviously know AI, that area of the world, that area of the market is growing incredibly, incredibly fast. So keep your eye on that. Fed minutes. The Federal Reserve minutes, they tempered expectations. So there was a general agreement on holding rates steady. So the Federal Reserve released their meeting minutes, meaning the recap of their meeting where they decided what would go on with, the Fed funds rate. And the Reserve January meeting minutes suggested that there was little appetite for additional rate cuts in the near term. So they're saying in the near term, we may not cut rates so heavily, but some argued more cuts would be appropriate. So some of the Fed officials argued more cuts would be appropriate if inflation eased in line with forecasts. So of course, they're watching PPI and CPI, producer price index, and the consumer price index to determine where inflation is trending and what moves they need to make going forward. And they pretty much said, hey, we're going to keep some Fed officials want to keep watching inflation. If we're in line, they want to cut rates. Others are saying we don't need to cut rates right now. We're steady. And so that's where those agreements, that's where those conversations are held in those Federal Reserve meetings, and they release the minutes of those meetings, so that we can get a gauge on what's happening because they want to carefully assess incoming data between the balance of the labor market and inflation. Because again, the labor market is tricky. It's giving mixed signals. While inflation isn't giving mixed signals, it seems to be a fairly easy to read trend in getting cooler and not as hot. But does that trend stay? I guess is the question. And then on the labor market side, it's incredible mixed signals. I don't know who actually knows what's going on with the labor market. You hear so many conflicting things, so that's playing a part in their decision making as well. So we'll keep an eye on that. I was saying earmark. We'll keep an eye on that because that's incredibly important. Now, Uber earmarked 100 million towards autonomous charging hubs. So Uber is sending even clear signals that it's all in on autonomous vehicle infrastructure. The ride-hail giant, which recently unveiled a strategy to dominate AV trip market share by 2029, announced Wednesday that it's putting 100 million towards charging hubs starting in the Bay Area, Los Angeles, and Dallas. Uber is trying to boost charging station construction. I thought this would be a lot more interesting than it is. It's Uber just really just looking towards the autonomous vehicles, which is going to be a thing. Like if you think about for millennials, your kids, younger people, will they need driver's license or will they have some autonomous vehicle taking them to their places that's run on AI, that is following the roads, that's run on technology and software and AI, and it's understanding where to go, where to take you, and you don't even need a license. And it will scale at some point and be very cheap. Like Tesla's trying to do it in a cheap manner. They kept saying that they were bringing out their autonomous vehicles and pushing back the wide scale spread dates. They are in some cities to start, but if you think 10, 15, 20 years now as AI and technology kind of gets a lot more intuitive and the compounding effect of how smart these AI models get allows us to believe that in 10, 15, 20 years that vehicles autonomy will be pretty widespread. So that's one thing to think about. Like what happens when it happens, then you may not need a driver's license. Your kids may not need that driver's license. So that's kind of something to think about. But Uber is trying to jump into that game with this 100 million investment towards charging hubs, which makes sense in my mind if they're going to have a fleet of cars that are even driverless. Interestingly enough, which is kind of, I guess, for the driver is weird to think about. Let's talk about Walmart. They did report some strong holiday growth, but their earnings outlook fell short. They topped fourth quarter earnings as they had their earnings report, mainly with expectations. Some of the expectations fell short. So they said Thursday their holiday quarter sales rose nearly 6%, and its quarterly earnings and revenue surpassed Wall Street's expectation. They do expect net sales to increase by 3.5 to 4.5% and adjusted earnings per share from 2.75 to 2.85. The CFO did get on CNBC and talked a little bit about speedy deliveries from stores are helping Walmart attract more shoppers and things of that nature. They did say that in the coming months they expect price increases from inflation and tariffs to ease. They also said it seems to be a little bit more normalized price environment. As we were talking earlier, inflation does seem like it's more normalized and it's giving clear signals. Um, so Walmart is obviously the country's largest grocery. It may be too early to say what pricing trends at the retailer mean for the rest of the economy. So that's a good thing. That's interesting to know. Walmart's a bellwether. So you get so much information from what's going on at Walmart because it's the largest grocer. You're able to understand a little bit about what's going on in the economy and things of that nature. So that's why you want to kind of understand a little bit about their earnings and how people are spending. So that's super important to understand. And we did go over the market already. Mega cap stocks there was a rotation. It seemed like, and they're kind of that rotation is paused. And yeah, again, the volatility is playing a huge, huge part right now. That's the basis right now. The volatility is playing a part, but it's not a bad thing. I think in the second quarter of the year, we kind of see a larger increase at that time. So um, that's the big news that you want to keep your eyes on. Let's look into the finance question of the week. What is going on this week? I had a couple of them, a couple that I liked. We've gone over this one before. What is the median age of the first time home buyer in the US? I think we've gone over this before. I think it went from like 37 to 38, age 37 to 38. I could be wrong. I know it's mid to early 30, or mid to later 30s. Oh, it's 40 years old. So it's buying a house is a big deal on age, but what the median age for people making a move is 40 years old. And where is this data from? This is from NAR. First-time home buyers made up 20% of home purchases. This is well below the 38% average seen since 1981. A typical first-time home buyer was 40 years old, up from 35. That's a 35 from last year, while the typical repeat buyer age rose to 62 years from the previous all-time high. So that's incredibly interesting. It really is interesting. We got to follow these trends in data. That's just telling us that home prices are incredibly increased. And yeah, that's incredible data, honestly. Let's look at our next question. How much do Americans spend on lottery tickets every year? I don't know. I know it's going to be in the very high billions, close to trillion, I would say. I would say it's close to a trillion, right? Oh, okay. 109 billion. Why did I think it was so much higher? 109 billion. I guess it's like a dollar. What is it to buy a ticket? I don't even know. A dollar or what? Yeah, it's pretty cheap. $2, is it? Okay. So 109 billion. I thought that was more. And this is from Statista. The actual numbers are from state lottery sales in the United States has reached 109.38 billion US dollars in 2025. This donated a decrease of 3.6% over the previous year, with a historic high of 113.47 billion in the US. Interesting. So why would that dip go down? Again, think about it. I'm assuming the dollars are going to other gambling sites. People are doing these prediction market gamblings now, which is an interesting burgeoning in companies with Polymarket, Kalashi that are doing prediction markets, which is very it's unregulated, and the regulators are more than likely at some point taking a look at these prediction market companies. And of course, you have like sports betting platforms and other platforms that are continuing to burgeon as well. But the gambling and the thing about the long term trends, gambling, all those different things are going to continue to increase for people. We just noted uh, first time home buyer stats. People are going to look to gambling to like circumvent things that they may not be getting right away. And so, it's people's prerogative. You could take a look at it as good or bad. It's just interesting enough to think about. Folks, that is the Your Money, Your Life podcast today. We will do this every week. Next week, we'll get it out, another one. Again, we won't, if you've been getting the emails from me, the subscriber emails of the podcast, please make sure to just actually go and subscribe to the pod. And you'll be able to hear and see everything there. As always, we'll talk to you next week.